and welcome. Here at ExpertBrokerUK, as professional bridging loan brokers right here in London, we see it happen all the time. Fantastic property deals just slipping through people's fingers. And why? Usually it's because traditional financing is just, well, it's too slow. So today, we're going to break down the powerful tool that's designed to solve that exact problem. Let's get right into it.
Okay, so picture this. You're at a property auction. Your heart's pounding, the bidding is frantic, and then the hammer falls. You've done it! You've just secured what could be the deal of a lifetime. The excitement is unbelievable, right? But then reality hits. You have a strict, non-negotiable 28-day deadline to come up with the cash. The clock is officially ticking. So what's your next move?
Well, you could try a high street bank, but let's be honest, their mortgage process can drag on for months. We're talking weeks of paperwork, really rigid income checks, and just endless delays. By the time they even have an answer for you, that 28-day deadline is a distant memory. And the result? You don't just lose the property, you could forfeit your entire deposit. It's a frustrating and, believe me, a very expensive lesson to learn.
But what if there was a way to just bypass that whole slow-moving system? This brings us straight to the solution we're talking about today, bridging finance. It's a tool that's specifically designed for these exact time-sensitive situations.
So what is it exactly? Well, a bridging loan is a short-term financial tool. The name says it all, really. Think of it as a temporary bridge that gets you from point A, needing the funds now, to point B, where you've got your long-term finance sorted or you've sold the property. It covers that financial gap. The really crucial point is this. It's an investment tool. It's designed to either make you money on a fantastic deal or save you from losing one. Simple as that.
The real power of bridging finance really lies in its flexibility. I mean, just take a look at these key features. Loans can range from $50,000 all the way up to £10 million over really short, manageable terms. Lenders often focus on the property's value, sometimes lending up to 70% of it, and they offer different types of security, like first and second charges. And another thing, they're open to both residential and commercial properties and can be a lot more lenient on credit history compared to traditional banks. This adaptability is exactly what makes it such a valuable tool for investors.
Okay, so its main benefit is speed. We get that. But how does it actually work in practice? Let's take a look at the process, which, we like to call the funding dash, because it really is a sprint, not a marathon. This map just shows you how incredibly fast it can be. Step 1 is just a simple inquiry. For step 2, you can have an offer in principle, that's an OIP, often within just a couple of hours. A property valuation is usually turned around in about 72 hours. Solicitors get to work immediately, and then, boom, the funds are released. The entire process is literally engineered for speed.
Now, this kind of speed isn't just about convenience. It gives you a serious strategic advantage. It's what we like to call your cash buyer's superpower.
Let's put them head to head, shall we? While a traditional mortgage is painfully slow, a bridging loan is incredibly fast. A mortgage can leave you stuck and vulnerable in a property chain, but a bridging loan, it effectively makes you a cash buyer, which is something sellers absolutely love. And while banks are rigid, bridging lenders are flexible, focusing more on the asset, the property's value. Honestly, the difference is like night and day.
If you remember just one thing, remember this number. The entire process, from your first call to having funds in your solicitor's account, can take as little as 1 to 6 weeks. That is the kind of timeline that wins deals. Of course, with any financial product, the details are absolutely crucial. So let's take a quick look at the different types of bridging loans and what you really need to know. So there are a few key types you'll hear about. A closed loan is what you'd use when you have a definite exit plan, like a confirmed sale date for another property. An open loan is much more flexible, which is perfect for projects where you don't have a fixed completion date. Then you have first charge loans, which act as the main mortgage, and second charge loans, which sit behind an existing mortgage to help you release equity. It all comes down to this one core principle. This isn't just about borrowing money. It's a strategic move. You use it to secure an undervalued property, maybe to fund a renovation that adds value, or simply to avoid losing your deposit on a great deal. It has to serve a very clear financial purpose. And now for the most critical point. A bridging loan is a secured loan. That means your property is the security. So please be aware that, just like with any mortgage, if you fail to keep up with repayments, your property may be repossessed. Having a clear and viable exit strategy isn't just important, it is absolutely essential. So, this leads us to the key question you should be asking yourself. Could this powerful short-term tool unlock your next long-term property success? For the right person, with the right opportunity, it can be a total game changer. So if you're facing a tight deadline or you found an opportunity that just won't wait, it might be time to think about a faster path. For professional, no-obligation advice that's tailored to your specific situation, just click the link in our bio to get in touch with us here at Expert Broker UK. Thanks so much for watching.